We're joined now by Aaron Smith from Superfund Asset Management. Aaron, morning to you. Thanks so much for joining us. 5 consecutive weeks of gains on the US market. Everyone's anticipating some profit booking. What's your call?
Well, don't hold your breath on the market. I think that the rally is going to be short-lived. There are a lot of reasons why we think that, and the first of which is the earnings season that we're going through in the U.S. is the economic equivalent to walking through a minefield. We're going to see catastrophic earnings reported in the U.S., and everybody's sort of saying, oh, maybe it's priced into the market already, but with the market going straight up since May 6th, I don't see how it's necessarily priced into the market. So I expect that the markets could actually reverse from here and test the lows sometimes in the next couple months.
Any sectors that are looking particularly good then from that minefield, as you put it? We've had two big sets of numbers. We've got Alcoa, and we saw how markets across the globe reacted to that, especially within the commodity space. And then we've got Wells Fargo, and financials have been rallying for a couple of weeks now for markets across the world. Anything in between these two sectors that you particularly think will survive the minefield?
Look, if you're absolutely committed to owning equities, which I think is probably a mistake at this point, then you better stick to commodity companies and Asian-centric companies. Forget about the financial sector. I mean, this is like, this is really way too early to be buying financial stocks at this point.
What's your own gut feel about what's happening in emerging markets, Aaron, at this point of time? Because we've been the beneficiary of a significant amount of incremental FII flows. In fact, from the 9th of March right until Thursday for our own markets, about $1 billion worth of FII flows came in. Is that sustainable, you think?
You know, in the short run, it's not going to be sustainable. I think that's just because of the recent optimism in the global equity markets. So, you know, if you see any kind of daylight in the U.S. markets, that's transferring over to the emerging markets. But as I said, I think that the outlook for the U.S. markets is going to be very, very difficult. I think that a lot of the rally has just been short covering from a lot of people who've made a lot of money from market losses. And I think that this rally is going to run out of steam at some point. What you have to see is that the rally itself was inevitable. I mean, the United States government by itself has spent about $12.8 trillion in stimulus and bailout packages. That's like, you know, the whole Indian market cap is only about $500 or $600 billion. So they've spent $12.8 trillion just to prop the market up. Even the United States market itself is only worth $9.5 trillion. So the real question here, Raul, is not should you buy stocks or no at this point. Even if stocks rally, the bigger danger is going to be around the corner, which is going to be inflation. Over the next couple of years, you're going to see inflation come back in a horrific way. So it's not even going to matter if your stocks... The point is this: stocks can make a paltry 10% a year going forward. However, the risk associated with achieving those returns is just not justified by the risk that's there in the equity markets right now. So what we would recommend, Raul, is to look at other asset classes, look at commodities, look at real estate, look at gold and silver, potentially even look at alternative investment strategies like managed futures. But to allocate into equity markets right now would seem to be a bit foolish.
You mentioned the word inflation, Aaron. We have a credit policy that's lined up in the not too distant future, in just about 10 days or so from now. What's your own gut feel about rates in India at this point of time? You feel that given the global disparity, there's a lot more headroom for them to actually come down?
No, I don't think there's a lot of room for that. I know that that's the consensus, and everybody thinks that inflation's not an issue, and that's exactly when inflation's going to come back as a major issue, when no one's looking. And basically, it's not an Indian issue. It's really a global issue, because there's no paper currency in the world today which is actually based on a real tangible value. In other words, the amount of rupees or the amount of dollars is just based on there's no actual physical value underlying the paper money, and hence, because of difficult economic situation, the paper money is being printed at unprecedented rates. In the United States, we don't even know how much they're printing the paper today, because they stopped publishing the M3 data. So we don't even know how much the money supply is increasing. this is going to be one of the biggest themes in the next few years as commodity prices get expensive, as gold goes to over $2,000 per ounce. You're going to see double-digit inflation throughout the whole of the Western world, and I think that India will probably have that as well.
Aaron, it's a catch-22 situation. You're talking about the fact that equities, perhaps even as an asset class, might not remain attractive going forward. Then you're talking about the fact that inflation is going to be something that's going to worry economies across the world. The problem with that is that even if you're just sitting on cash, you're still losing money. As a fund manager, what kind of cash levels are you sitting on presently, and are you feeling comfortable sitting on going forward?
Well, we have an active trading strategy, so yes, we do have quite a big cash position at the moment while we're waiting for technical trends to develop in the market. Right now we're being patient and waiting. However, if you look, there are lots of great places to invest your money. There's unbelievable opportunities right now, just not in equities. Okay, you could look at commodities, for example. When the inflation story hits, I think that commodities will be much more expensive. And the great thing about food and energy and these types of products is that you know they'll have a value a few years out. You cannot say that about any paper stock out there. You can't say for sure what the value will be 2 or 3 years from now. But I certainly know that Indians are still going to need food and rice and energy, natural gas. All these resources are a great place to invest right now because they're very, very cheap and the opportunity is huge. I think another thing, because what will happen is people will understand that paper money is actually worthless. It's just paper. It's no different than shares of Lehman Brothers stock. You know, the stock isn't worth anything anymore. And with people will understand that the paper currency is just paper. And so what will happen is there will be a huge shift to gold, and then for the people who can't afford gold, it will be to silver as a substitute. And I believe that these will become the major sort of stores of value as they have been for the past 2,000 years. Mind you, up until 1971, before then the US dollar was based on gold. Most of the paper currency throughout history was based on gold reserves of the country. So gold itself is the only safe currency. So it absolutely does not make sense to hold cash. You will automatically lose money because of inflation. However, if as an alternative to cash, gold and possibly silver with even more upside is a great alternative. On the contrary, if you look at equities, which could be very attractive, but also quite risky. An alternative to equities would be to look at alternative investment funds like managed futures funds, which don't depend on the overall direction of the market because they can make money. Managed futures can make money when markets are going up, when markets are going down. And at Superfund, all of our funds are up double digits in the past 12 months. So it's just a great evidence of the fact that you can make money even in this type of economic environment.
Good speaking with you, Aaron, as always. Thanks so much for taking time out and joining us this morning. That's Aaron Smith from Superfund with his thoughts on the world at this point. We'll take a break. Pavan Goenka from Mahindra & Mahindra will be joining us when we come back.